Good morning, everyone. I hope we are all doing well, doing great, and keeping safe. You're welcome to the NESG webinar on a perspective to financial inclusion with a deep dive of how banking and payment systems help to shaping that entire industry. This promises to be a fantastic 2-hour debate and discussion with executives of depth and soft. We appreciate every executive that has given their time to come to this webinar. My name is Olufemi Oyenuga, and I'll be anchoring this session for the next 2 hours. It gives me joy to actually welcome everyone to enhancing the banking and payment systems for effective financial inclusion on the 14th day of August 2024. It's one of our pre-summit events in NESG because the big bang event happens every October. And as a general norm, we do a lot of pre-summit events. This is one of that. Is really very topical. It talks to what addresses some of the concerns in our society, in our economy, in our community, and also I'll be traveling through this journey with some of my panelists that I will introduce in the course of the program. But suffice it to say that the financial inclusion strategy was initially put together, many years ago. I'd say 2012. So there's a national financial inclusion strategy. And we've been trying to get goals at achieving 80% of financial inclusion in the country. Initial target was set at 2020. And there was a revise of that in 2020 when it was just up to 58.4% of adult population that had been financially included. I dare say that not everybody has enjoyed part of this financial inclusion opportunity. Some are even finally, they're permanently excluded, but some of us have not even gotten credit as well. If you look at what is happening there in our documented SME players in the country that have been financially excluded and not having access to funding. That now helps the central bank to look at the strategy again and beef up the strategy in 2012. So there's a financial inclusion strategy of 3.0 of November 2022. And our goal and target is to actually get to a point where we have at least 85% money. We have over 807 microfinance banks and 58 insurance houses, and a lot of fintech startups just north of 300. With all these heavy and powerful, telling the discourse around the challenges that the community is facing in terms of service ability, transactional failure, which is about a rate of 15% on fintech, traditional banking and POS. Are we even listening to the voice of the customer? What is the KPIs that is driving customer-centric index? How are there barriers to entrance in financial inclusion? Why are we not hearing the voice of our female in the financial inclusion space? And I dare say that from a perspective of financial responsibility, the female gender have actually been more trustworthy than the male. They are the ones that actually pay back loans that have been given, and they're the ones that have a very low portfolio at risk. What else is gender balance in financial inclusion? This is why we put together the panel of today to have this discussion. Before that, I'm not going to run ahead of myself. We're going to have a welcome address by Mr. Larry Akimbo, one of the board members in NESG. Is going to give us a welcome address. After that, we have a keynote speaker as well. Dr. Nuruddin Abubakar Zaro is a technical advisor to the president on development of finance and financial inclusion. Such a big shoe and a big capacity to fill. And the panel is made of erudite scholars and erudite professionals in the financial services sector. By no means, in terms of introduction, Mr. Fasasi Sarafadin Atonda is the national president of Association of Mobile Money and Banking Agents in Nigeria. He will take us through his perspective and answer some questions as we delve into the webinar. And ably represented, which is a double twin carburetor here from Action Microfinance Bank, because you cannot talk about financial inclusion when you don't bring the microfinance into the subject. The chief executive of Action Microfinance Bank, Mr. Taiwo Jordan, ably represented by the chief operating officer, Mr. Vincent Mwegbe, is going to take us through the onboarding perspective in terms of financial inclusion as well. Can we even talk about financial inclusion when we don't look at e-banking? So Mr. Jibade Adewale, who is the chairperson of committees of e-banking industry, as the head, would try and give us his own perspective around financial inclusion as well. As we now begin to look at what is our regulator saying, CBN, they're the key glue that brings all of us together in terms of payment policy regulation. Do you even have physical policy that people really understand? And then we'll bring a curtain call to the questions for the panelists from Mr. Abraham Aigbe, is a chairperson of Committee of Heads of Banking Operation. So you can see a star-studded, loaded elite. Now, with thousands of apologies, we initially had the plan of actually having a female balanced panelist array. Unfortunately, due to the exigency of work and urgency, some of them dropped out yesterday, and we couldn't have these late minute change to the agenda. But I'm sure you do understand that the voice of the female are always appreciated and supported in a webinar like this. Then Mr. Neya Jawo will help us bring everything together. After the Q&A session, we are eager and waiting to hear solid questions and answers and perspective as well to the discussion, as Mr. Ajawo gives us a closing remark. So that's actually how we're going to travel today. So before we delve into the subject of the day, may I make welcome our address from that will be given by Mr. Larry Akibo, the board member of NESG. Mr. Larry, the floor is yours, sir. Thank you very much.
Thank you very much, Dr. Inuga. I hope everyone can hear me okay.
We can, sir.
Okay. All right. Thank you very much. My address here will be very, very brief, so we can get on with the business of the day. You know, we have a started lineup, so I would like also to hear some discussion. But I would like to say heads of ministries, departments, and agencies, captains of industries here present, heads of association, members of the donor community, ladies and gentlemen. On behalf of the board and management of the Nigerian Economic Summit Group, I am delighted to welcome our distinguished panelists and highly esteemed participants to this pre-summit event titled Enhancing the Banking and Payment System for Effective Financial Inclusion, hosted by the Financial Inclusion Thematic Group of the NESG Financial Markets and Financial Inclusion Policy Commission. As has been said earlier, this is one of the pre-summit events of the 30th Nigerian Economic Summit, which is jointly organized by the Nigerian Economic Summit Group and the Ministry of Budget and Economic Planning. Next 30, as we will call it, pre-summit events are geared towards engaging stakeholders like people on this virtual meeting today in a series of conversations and sessions in the weeks leading up to the 30th Nigerian Economic Summit. This year's summit will hold from October 14 to 16, 2024. And I would like to quickly use this opportunity to please ask you, if you have not done so already, to go register. The website is 30.nesgroup.org. Once again, it's 30, that's 30.nesgroup.org. Thank you very much. Now, the importance of financial inclusion and the availability and accessibility of financial services to individuals and businesses cannot be overemphasized. It plays a significant role in driving investments and productivity, enhancing economic access, and reducing poverty and inequality. While Nigeria's financial inclusion rate has risen to 74%, which is one of the highest amongst developing and emerging economies, the economic chaos that accompanied the Naira redesign policy in 2023 has raised concerns about effective financial inclusion in the country. A severe cash crunch accompanied the policy. As we all know, it pressurized the entire fabric of the financial system and devastatingly impacted economic activities across many sectors of the economy, particularly trade and agriculture, which are predominantly in the informal space. This situation reflected that cash still remains Nigeria's predominant means of transaction, and electronic payments have not been fully adopted. The low effectiveness of financial inclusion could be attributed to challenges such as breakdown and failure of financial services infrastructure, inefficient dispute resolution system, limited and expensive access to loan services, low financial literacy, and depleting trust in the financial system, amongst other factors. Nigeria has one of the world's most sophisticated financial systems architecture, with various innovations across financial services, products, and fintechs. While the role of innovation cannot be overemphasized in the development of the financial system, broad-based adoption among the people is crucial for innovation to deliver the expected economic outcomes. Hence, this next 30 pre-summit event on enhancing the banking and payment system for effective financial inclusion seeks to devise strategies to address the headwinds to effective financial inclusion and create a more inclusive financial system that benefits individuals and businesses. Addressing the multifaceted issues regarding financial inclusion requires the collaborative effort of governments, financial institutions, fintechs, civil society, and indeed everyone. On this note, I want to welcome our keynote speaker, Dr. Nuruddin Abubakar Zauro, the technical advisor to the President on Economic and Financial Inclusion in the Office of the Vice President. Now, this new office is also indicative that the inclusion agenda has the attention of the highest levels of government. I thank him most sincerely on behalf of the NESG for finding time to speak at this event. I also extend our profound appreciation to our moderator, our esteemed panelists, and every participant for accepting our invitation to share your knowledge, expertise, insights on financial inclusion at this event in the national interest, as we like to say at the NESG. I urge you to candidly contribute and share your insights to ensure that the benefits of financial inclusion are widely shared. Finally, I urge you very strongly to once again, if you have not done so, to register for the 30th Nigerian Economic Summit through the NESG website, to join other experts and stakeholders to articulate an agenda for collaborative action for growth, competitiveness, and stability of our dear country. May God bless the Federal Republic of Nigeria. Thank you very much for listening.
Thank you very much, Mr. Darian Akibo, for that heartwarming and beautiful welcome address. So that we move on expeditiously with time, it gives me honor of bringing to the podium Dr. Nuruddin Zauro to make give us his keynote speech. Doctor, the floor is yours, sir. Thank you very much.
Okay, thank you so much, my dear brother, Mr. Adenuga. Thank you so much, the panelists and then the participants in this very important pre-summit event. Distinguished ladies and gentlemen, please permit me to stand on the existing protocols, established by the previous speakers right now. So thank you so much once again, Nigerian Economic Summit Group, for this very, very important event, and of course your sustained effort in addressing critical issues, burdening our country, today. And of course, you have always been very proactive to put in place, very important and very timely activities, engagement, as the need arises, and of course, communicate to the relevant sectors, for them to act accordingly. So thank you so much for that participation. So in this event today, bearing in mind, the topic of discussion today, enhancing the banking and payment system, for effective financial inclusion, I think is very timely, especially looking at what we are facing today, economic challenges, and of course, urgent need for all the stakeholders to put hands together to act, not only to act, but act now. So it is in this regard, distinguished ladies and gentlemen, that I would like to congratulate the NESG, for your effort, and resulting impact, in furthering inclusive growth and development. Distinguished ladies and gentlemen, the NESG has always been very thoughtful in leading the conversation and dialogue on how to address most pressing economic needs that affect Nigerians. It is therefore not a surprise that the focus of today's discussion is very, very time sensitive, looking at the challenges available before us in the country. Distinguished ladies and gentlemen, we are all a witness to the recent happenings in the country where young Nigerians took to the street, for some pressing demands from government and of course other players, because the demands are not necessarily only from government, but it also requests for even well-to-do Nigerians and other private sector players the need for action. And we also witnessed the swift action by our dear President Bola Ahmed Tinubu, GCFR, in terms of his proactive ways, as well as the prompt response to the need and the yearnings of those protesters by highlighting very important and of course efforts of government that the government has put in place actually to ensure that those issues have been addressed. We are fully aware that the time is needed, the need for result-oriented reforms and policies of government is really, really urgent, and the result is needed to be reflecting in the country today. This incident has, of course, brought to fore the urgency, the urgent need, to address the economic situation in Nigeria. And of course, the gap between the policy-making interventions, the intention of the policy-making as well as the implementation outcome. This brings about the obvious gap, in between, and there's a need for us to work tirelessly to address those gaps. And I know that Nigerian Economic Summit Group has been playing a very important role in this regard in order to bring it to the attention of the policymakers, for them to do the needful in this regard. Distinguished ladies and gentlemen, we're all aware, based on the statistics at hand, it shows that over 30 million Nigerians are still financially excluded based on the, FINA report, that we have in the recent time. And we all know that despite the importance of MSMEs in this financial inclusion journey, we know that quite a lot of them, they don't have access to financial services. I think based on the report, I think the number is just 6%, which of course, access to credit is just about 6%. So this brings about a lot of challenges in terms of trust-related issues, showing that the adoption of financial services require a lot of, an urgent need for interventions. Financial inclusion in Nigeria, of course, has been one of the top priority, of course, since the issuance of National Financial Inclusion Strategy by the Central Bank of Nigeria in 2012. We all know that. And then again, there has been a lot of other strategies that were followed, I think version 2 and 3, as a result of research that were conducted to ensure. But as at when we started, the exclusion rate was about 46%, but now it has been brought down to somewhere around 26%, which makes it, visible. But then the issue here is that we observe that, there are some couple of challenges here in the implementation journey. that led to a kind of slow pace of the adoption of some of these services in the country. And that is why, because of having that in mind, and of course, the need for a high-level interventions by the government of the day in order to enhance adoption of financial services in the country among both the last mile and even the MSMEs, women, youth, and every other strata of the country. That is why, upon assumption of the office by the President Bola Ahmed Tinubu, GCFR, he actually, he actually recognized financial inclusion as a very, very important narrative. And that is why it becomes a critical component of the renewed hope agenda of Mr. President. This administration, therefore, is determined, not only determined, it has shown because of its activities and the policy reforms and initiatives that were prone. You're talking about student loan, you're not talking about consumer credit, and many other initiatives that were put in place, which are known to the people listening here. I don't have to go over quite a lot of them. So these are put in place in order to enhance the adoption of financial services, in order to improve the livelihood of especially the last mile, the well underserved, communities in our country. And of course, it is in this same perspective, distinguished ladies and gentlemen, to show commitment, to show that Mr. President is actually very ready to do the needful in this regard. He immediately created the Office of the Technical Advisor on Economic and Financial Inclusion, and at the same time also elevated the conversation around economic and financial inclusion to the agenda of the National Economic Council. This is the first time this kind of thing has happened, in Nigeria. The question is, why do we concentrate on this narrative these initiatives that are put forth? Reason being that subnationals, they play a very important role, in the implementation of national financial inclusion strategy and other financial inclusion initiatives. They play important role, and we know that at the National Economic Council, that is the convergence of everybody, both the federal and subnationals, they come together. Ladies and gentlemen, upon assumption of office, by His grace, we were given opportunity to serve as the technical advisor on economic and financial inclusion. Upon assumption of office, therefore, the first action we took was to improve the outcome-based collaboration and, of course, commitment among economic and financial inclusion stakeholders. To that effect, we organized a national workshop where ASO Accord on economic and financial inclusion was signed, led by the Vice President, Federal Republic of Nigeria, Senator Kashim Shettima, the representatives, other representatives of economic sector, of the country, both public and private sector segments. They participated in a symbolic signing, which indicates a commitment, symbolic commitment of all the actors in the country. So when the accord was signed, which both fiscal, security, financial sector, as well as the presidency and the private sector and subnationals came together and indicate a commitment to that effect in line with the renewed hope agenda of our dear president. We all saw it and we all witnessed it. And since that time, again, our activities also followed up where we began to work on the operating model to ensure that at the presidency, we now have an operating model and, of course, a legal framework for the implementation of economic and financial inclusion. And another thought also revolves around pursuing not only financial inclusion as the case may be, because we know that financial inclusion involves access, but apart from access, the quality of services, what about the usage of those services? I think they are also very, very important. To that effect, we try to combine both financial and economic and financial inclusion so that there would be more economic opportunities, because a couple of Nigerians also have issues to do with the income and well-being and whatever. So therefore, economic activities that are being churned by this administration, by successive administration, can also be able to put together in order to support financial inclusion. Ladies and gentlemen, the theme of this event for today, enhancing the banking and payment systems for effective financial inclusion, is therefore apt, timely, and of course in tandem with the objective of ASO Accord that was previously signed for economic and financial inclusion. As we all know, we deliberate on this subject today. I will therefore crave your indulgence, to advance a very important thought around it, and of course communicate the outcomes so that we will ensure the implementation of the highlight of your resolutions. We therefore And therefore, the deliberations of today should also be based on economic inclusion and financial inclusion altogether. The 2023 survey it's shown clearly that access is no longer a major barrier to financial inclusion. A lot of barriers also has to do with, they are economic in nature. So that is why it becomes very important for us to have that at the back of our mind while we deliberate on today's event. Ladies and gentlemen, another important issue has to do also with the collaboration. We've always been talking about public-private partnership, but we also know that there is a need for a lateral collaboration within the public-public and then the private-private also, in order to ensure that we balance so that we come together. And all these put together, they are symbolic indicators of the content of ASO Accord, which I want to believe it was a public document. Everybody had access to it and then have been able to go through and see what is the objective of the ASO Accord itself. Distinguished ladies and gentlemen, the need for public good perspective beyond impact investment is also very imminent, very important. A lot of enterprises that focus on the last mile are working on the impact investment. But in our climate, however, our partnership should also be of common good initiative that would facilitate impact and sustainability, which will benefit the underserved community, business, and of course, even the government of the day. Ladies and gentlemen, the time for many talks is over. Nigerians need urgent outcome. It is important to have that in mind, at the back of our mind as we deliberate in today's event. To that effect, therefore, I call on the Nigerian Economic Summit Group and all stakeholders to pursue an outcome-based approach in addressing the challenges before us today. I assure you that the Office of the Technical Advisor on Economic and Financial Inclusion is ready to partner with you and, of course, to provide all the needed support and guidance on how best we can improve economic and financial inclusion going forward. I wish you all fruitful deliberations as we look forward to receiving the communique detailing your recommendations and call to actions in this regard. Distinguished ladies and gentlemen and their participants in this program, I therefore bring to you a message of support and determination to partner with you in this cause from the Office of the Vice President of the Federal Republic of Nigeria. Thank you so much, and God bless everyone in this call. Thank you, and God bless Nigeria. Good morning once again.
Thank you very much, Dr. Daro. That was reading Daro. That was a fantastic keynote. You touched on a lot of interesting nuggets that will drive the next segment of this webinar. You said access is no more a problem. We are economically, not only financially included. You talked about, partnership, PPs and private public. You also touched on the need for, of investments as well. And also looking at collaboration and the holistic agenda that this government of the Federal Republic is driving through President Bola Ahmed Tinubu. Such a key economics to chew on. And that you set the tone rightly for us, Doctor, into going into the panel session. The panel session is going to be an interesting one because each panelist have 10 minutes to just take us through some thoughts. They will share their own perspective in 2 minutes and get 2 questions from me. But as a general precursor to that, there are some things that also determine why the enhancements of banking and payment system for effective financial inclusion is very important in the history of Nigeria today. And if you look at the complaints around public transactional satisfaction, it seems to be sort of poor, from financial services provider in terms of service reliability and high, rate of failure. And also, we cannot move away from the big elephant in the room, cybersecurity and fraud. And sometimes the response on dispute takes a while, and a poor customer service as well. Who is even measuring this customer satisfaction index? And the problem continues to impede our growth in the financial inclusion trajectory. We have economy like Kenya doing around 89% of financial inclusion, to reason why we are still where in Nigeria. Why we prefer cash payment rather than digital transaction. I mean, what Global Payment reports in 2024, it concludes that 50% in 2003 that actually still is actually globally is cash driven, which is a global rate of 16%, and is projected to be declined to 42% in 2027. Now Nigeria will now be around 11% there globally. That is a source of concern. Even when we look at what we just did with the Naira redesign as well, that also affected and tanked the trajectory of financial inclusion. Now, setting that as a tone, I want to go to Mr. Sarafaddin for SARSI. In your view, even when you give us your 2 minutes, perspective, expert perspective, what do you think is the experience of mobile money and bank agents in this area? And what are your suggestions to surmount the problem? And the second one, sir, is that with the great work that you've done with mobile money and agency banking is acknowledged, how do you think we can deepen financial inclusion in the 6 geo zone in Nigeria? Because technology like artificial intelligence is around us now. How can that also help? Over to you, sir, Mr. Sarafaddin.
Okay, thank you so much, Doctor, the anchor, and also the panelists and our esteemed participants. I must first, on behalf of the Association of Mobile Money and Bank Agents in Nigeria, commend NESG for staging this again. They have been doing it for long. I remember I've been part of the thematic group since 2017, and consistency is a key word in inclusion. So we salute your courage. You have been there. We appreciate you. Let me start by saying that when we look at the service delivery, service reliability, between now and where we are coming from, I think we are far better. I think we must commend the enablers. We must commend all the stakeholders. Gone were those days when you transfer money and you will not get it in the next 3 days. It is most importantly, the fintech to also to meet up with the level of the pace that businesses are happening in Nigeria today. So I think service is very reliable now. I must confirm that we are having that experience, and that is why most of the merchants today they are accepting payments is as easy as anything. Confirming their payment is as easy as anything. So they don't need to be calling their account officer. So amount has entered my account as Mr. So paid. So instantly, fintech has made it easy. I must give it to them. You hear a notification, pan, and you move on to the next one. And I think we are good with that. So transaction failure rate. Also, I think people with data NIPS can actually testify to that. And most of the dashboards that are available to us as agent network and as Amban, we have significant failure rates in most of the transactions today. So I think we should give it to NIPS. We should give it to all other players in the process. The challenges of yesterday are no longer the challenges. So we now have the new dynamics of challenges. And that is where we are more practically being involved as association because we are the last mile. We have the feasibility and experience of what is actually happening. The issue of fraud, for the fact that more than 70% of payments has moved away from conventional banks to the non-banks, to the fintech, and the volume of transactions has also improved. So that's actually technically should expect that there will be fraud, there will be increase in fraud rates as we move on. But the challenge is for the fact that we have AML, we have all other preventive measures in the formal banking, but we have not been able to fully develop that in the non-banks, as actually giving more room for fraudsters to keep perpetrating their evils. And as an association, we jump into this, and because we believe it's a stakeholder challenge. So, and we have to approach it. It is no longer let us approach it from a technology view or from human-related view. We have to put everything together. So we have been working with security agents. We recently launched a joint task force comprising of police, DSS, and all other service providers, for us to provide them intelligent report, because most of these transactions, before they become issues, we usually have the feelers. We usually see the red flag. For instance, when you see a transaction coming to your dashboard, the same amount of transaction, 200, 500, 200, 500 from the same card, I think the real thing is for us to escalate it to the security agent to probe and come in. Before now, we don't have that structure in place, but by our joint effort, we have a platform called Agent Joint Task Force, where we escalate to the DSS and police to take charge of. Also, there are dynamics to transactions. Transactions are not just happening. Economic activities drive transactions. In areas where we know that the only economic activity happens once in every 7 days, in areas like Biningwari in Niger State, boundary of Niger and Kaduna, where we only have local market that are open every 7 days for transactions, and you are seeing transaction of cash out every day. So it is a red flag that kidnapping cash out are going out at those agent locations. So, and with this platform we have established, we introduce what we call identity for agent, because security starts from identity. So we ensure that all agents now have verifiable identity, and we also pass them in conjunction with CIBN. We're also pushing them for training, capacity training, so that investigations will no longer be terminating at agent location. Today, agent will just say, well, customer will walk in, I want to transfer to you. Unknown agents, we just collect 1 million, 2 million transfers without due diligence, without record keeping. And at the end of the day, they will discover that those are fraudulent transactions. When police are investigating, they won't move forward. They will just arrest the agent. Agent will not be able to provide any ID card or any KYC of the customer that are cash out. So a lot of agents have been in prison because of this. And we discovered that is a knowledge gap. And we partner with CIBN to also introduce what we call agency banking certification, where they will be passed through all day. And on the area of dispute resolution, I think this is the area where we have been interfacing with regulators. We have been trying to pass this across to the Central Bank of Nigeria, because as of today, you don't have your dispute resolution strategy for informal banking, which is agency banking and all fintech solutions. What you have today, what you are using is the formal strategy to run an informal payment system. If there is a transaction failure at agent location today, what you are going to be passed through is go to your bank, go and lodge the complaint. Why can't we enable that agent that is known in that community to initiate, that dispute, and be able to track it? And also, if an agent or an aggregator has issue with service provider, where are you supposed to report it to? As of today, the channel is still only through your financial institution. That is the only way you can escalate to the regulator. And things are happening. A lot of, it's also affecting service providers generally. A lot of super agents, they have shut down their business today. You hear 40 billion chargeback issues, 10 billion for chargeback issues. And these providers are shutting down. And chargebacks a very simple issue if we work collaboratively. So, but because there is a gap of information between service providers, processor, this syndicate, they capitalize on this, and they will do double cash out at agent location, enter the bank, also cash out. So, but I think this is what we have been working with Association of Licensed Mobile Money Operators to also see how we can, work together perfectly. Then on the area of financial inclusion itself, we have looked at the final report and we discovered that exclusion actually has a geographic dimension. And we set up a research team to probe this. And we discovered that over 300 local governments out of the 774 local governments are without bank branches. Why are bank branches so important to Nigerian policy of KYC? That all accounts must have at least foundational identity, NIN or BVN. And you only have access to BVN at the bank branches. So in those local governments without bank branches, that means they won't be.
Did we just lose Mr. Sharafuddin? I believe
on board enough agents. Yeah, so do we also, NIMC today, is NIMC also working with the stakeholder? Because NIM is very critical to financial inclusion now. So they need to be on board of every financial inclusion conversation. They need to also come on board we need to take financial inclusion as a serious matter, as a stakeholder, responsibility. So we set up what we call neighborhood financial inclusion centers across those excluded 300 local governments in Nigeria to provide a one-stop solution of financial inclusion service where customers of the ruralness can walk in and have their SIM registered, have their NIN done, have their BVN done at that same spot, and have their account open. Also, we discovered that there is a gap because a lot of accounts today, when you open it, in the next a few months after, they become dormant. Why are they dormant? Because the aspect of economic inclusion is missing. And we look at it, government is doing a lot of intervention programs, a lot of palliatives, a lot. But why are they not routing it through the existing financial inclusion, players, channels? Today, government want to push out palliative to about cash transfer to about 50 million Nigerians. And in the last 6 months, they have not been able to do that because only 5 million have bank accounts. Only 5 million of them have bank accounts. About 10 million are without bank accounts. And financial inclusion players, we have been reaching out to the government to see how do we help you to reach out to those without bank accounts. It is an opportunity for us to onboard them into the financial space. And I think collaboratively, we have been working with Office of the Vice President on Financial Inclusion, Dr. Nuruddin Zaro, and this is helping us to really reach and bring every stakeholder together. Then on the regulatory side, we are also concerned. Okay.
This is Fasasi.
Thank you.
Yeah, thank you very much. You're just so that you've actually painted a very good picture for us, and you made the life of Mr. Vincent from Action Microfinance Bank interesting, because some of the nuggets that you dropped, he will help us unpack it. So you did mention about how do you reach the grassroots. So, Mr. Vincent, what do you think are the efforts of financial services provider in improving the situation of things as painted by Mr. Fasasi? And, you Action Microfinance Bank played a pivotal role in the past, has been chairperson of Association of Microfinance Bank, but there was always difficulty in terms of data completion and accuracy like as hinted by Mr. Fasasi, BVN, NIM, in the sectoral industrial play. How do you address the problem of undocumented SME section? So a lot of interesting nuggets. You have 10 minutes, Mr. Vincent.
Okay. Thank you very much, Mr. Yenuga. Thank you, Mr. Fasasi. You've laid a very good foundation, as mentioned by Mr. Yenuga. It's very interesting, the points you have raised, especially around the areas of telecoms, how much we're able to penetrate the nooks and crannies of the country in terms of our telecoms penetration. And why do I talk about telecoms? For the financial services providers and what we have to do, there has to be a digital transformation. A lot of service providers are turning towards this. We talked about the fintechs, and this is essentially about the non-bank financial service providers involved in payments. But the banks, commercial banks, microfinance banks, other players in the financial service provision space need to start taking into greater cognizance this digital transformation. This is the way to reach out to many people. I think a long time ago, it became very clear the role of technology in providing services, in reaching out to far distant places where you cannot go and establish branches. And of course, again, that is where you have agency services coming in. Definitely, with all that in place, and financial institutions, financial service providers, looking at how to transform their services, how to digitalize their services. How do you serve our customers? Yes, the knowledge is not there. The knowledge may not be there for some of the customers out there, for people that want to use financial services. And of course, what that means that there has to be education, financial literacy programs. I mean, this session we're having today is obviously one of them. In Action, in the past 7 years, we've always been having a seminar, a financial inclusion seminar on a yearly basis. And this we do to make sure that we are drawing people in, creating awareness, creating that knowledge base for the citizens, how to use financial services in the country. So it's extremely important that this is done. And as we do this, it's important that we also pay attention to the customer experiences as they use these services. Extremely important. We've talked about a drop transaction in the bank, in the payment systems. That needs to be taken care of. It is important because if those drop transactions, failed transactions are not addressed, that confidence in adopting this technology in conducting services, payments, will be highly challenged. To be highly challenged, and once that is done, for the customer service experience, there needs to be an industry standard. There needs to be an industry standard. What is the industry doing? Yes, NIMS is and other payments and other institutional bodies. They've come up with dispute resolution portals, automating the process, creating, defining turnaround time for dispute resolutions. But outside of that, who is listening to the customer? Are we hearing from the customers? How satisfied are they? So from time to time, there has to be a standard created as to what should be the minimum service expectation from customers, and players in the industry encouraged to conduct such regular surveys, and where possible, use independent organizations to conduct those surveys, see what they are rated in terms of the feedback from their customers, and eventually when standard is set as to what that standard should be for the industry, then it will continue to push players in the financial service industry to begin to listen to customers and organize themselves, improve themselves to meet the expectations of the customers. Now, when we talk about the SMEs, I think essentially financial education has a lot to do with SMEs and bringing them into the fold. One of the biggest challenge of players in the SME sector, like as we identified, has to do with documentation. Documentation, first of all, with registration, appropriate registration, CAC documents, business registration. So financial education definitely will also go a long way in helping players in the SME field to begin to understand how they need to organize their businesses. And of course, that starts clearly from having their businesses properly registered, educating them on how to keep their books. Because if you are playing in the financial service area for the SMEs, you talk about giving them loans, granting them loans. One of the things you want to look at is how is their business doing. Where those things are not documented, it becomes a challenge for financial institutions in extending credit to SME players. So as we educate SME players with those seminars, literacy programs, and all that, we begin to see that these players in the SME sector get more educated, informed, organize their businesses better, and this gives them advantage to pull from credit available in the industry. I think I'll stop here at this point.
Thank you very much.
Yes.
This will help us establish where the bottlenecks are. And I can see the passion that you exhibited in terms of benchmarks. What are we measuring? Literacy, education, some of the things that Axiom Microfinance Bank has done in the economy. But you now made the job of Mr. Jibade Laolu Adewale more interesting, because as he goes into his own 10-minute session, he will try and also help us unpack two questions that have been troubling our mind. You know, we recognize that there's some financial services platform better than the other, and customers experience this in different areas. What benchmarks, as hinted by Mr. Vincent, should financial industry operators set to improve, you know, this pan-country, worldwide customer experience? And secondly, how do we even build trust in our infrastructure when cybersecurity crime is dwelling with us every day in the society? Financial fraud prevention is come here to stay. How does it now help us sort what the SDG goals for trust is in the ecosystem? I yield the floor to Mr. Ajibade. Over to you, sir. Thank you.
Thank you, Dr. Yunuga. You know, Mr. Vincent actually answered all my questions. So, but then again, I will write on most of the things he mentioned. What are the problems? You know, high transaction failure rates, losses to fraud, poor responses to disputes, and all of these things form together to cause customer service issues. Financial institutions know that if they don't improve on their customer service, they will die a natural death. So for my side, I think everybody should, and which is what most of us are already doing. Service availability is important. We should aim to have 95% because, again, there are dependencies. You know, in the ecosystem of every transactions, there are more like 2 or 3 players for every transaction to be successful. So you should at least aim for 95% success rate. And average resolution time is also very important for customers. You know, a customer has complained, and before you know it, it takes 2 or 3 weeks before you get back to the customer. Those things are things of the past. You should also create platforms for your customers to complain, from a telephone number that they know, to an email, to a phone number that they send the chat to, even to social media. They can reach out to you, and then you'll be very responsive from there. Now, if you are also compliant with what the regulators are set in place, the CBN has a robust policies and regulation guiding all our interaction with each other. Where CBN says your reversal should not be more than this time, please adhere to it. Then adopt advanced technology, technologies that can help you to handle big ticket transactions in terms of counts, blockchain and some other things that can facilitate quicker responses to consumers. Then mapping out the customer journey. You already know that if a transaction starts and you didn't see the end of it, intelligently, you should know that this transaction has failed. As that customer be refunded his money, because when the customer knows that if I do a transaction and it failed, I don't even need to call my bank. Automatically, my bank reverses my money. Then the customer will be, comfortable with using digital platforms and embracing digital payments. Feedback I mentioned earlier on is also very important to the customer, and making sure that we digitalize a lot of the journey. Why do customers really need cash? To be honest with you, a customer wants to transfer money. Wants to give cash to this person for services. Why are we not partnering with merchants and collaborating with retailers so that most of that journey is digitalized? It doesn't have to be database. It could be the simple USSD or SMS banking. But let's just ensure that we digitalize most of the problems. Now, in terms of fraud, there are a lot of funds available in the market that can help fight this fraud. Funds from government agency, international organizations, private sectors, and partnership, like the EFCC, the Nigerian Primary Agency for Combating Fraud Crimes. They have funds from federal government to combat fraud, even from donors like United Nations and World Bank. Nigeria Asset Recovery Management Fund too. There is that fund available from the federal government to recover and manage assets seized from individuals and organizations involved in fraudulent activity. That fund is also available to combat fraud. Anti-Corruption Trust Fund, there's that fund too. And there are several funds from corporate donors that will just give it to the industry to fight corruption. And this is beside the funds from international donors like USAID. But for us, we need to be transparent and accountable in managing these funds. One, the players need to report reported fraud cases in their organization. Most of us, to be honest, we can keep some of this information. When there's a fraud, the regulation says you should, in order to help the industry, you should report such fraudulent activity so that we are all aware. And there must be more collaboration between players. And you can see the other time I asked Abraham that I sent you a chat, and the chat is around some industry collaboration that we need to be doing. I hear Mr. Fasasi mention some things they are doing with law enforcement agency. We have all been working in silos, and then again, this is not to push to one person, but we are always all trying to solve a particular problem. This is that time that the industry came together to gently fight fraud as a problem. So we don't have to work in silos anymore. Work with all the stakeholders in the market and see how we can tackle these guys head on. Investment, innovation, and technology is also very important. I mentioned earlier on, if you follow the regulation and policies of the central bank, you will realize that some of these problems will have been solved if you are following up. Because if an account exists and there's no BVN and NIN attached to that account is honestly prone to fraud, being used for fraudulent activity. And the same thing with dormant accounts. The laws around dormant account is clear. How long it takes for a dormant account should be dormant and what should happen. If there's an account that has PND on it, I don't know how that account can be used for fraudulent activities. So we need to build that culture of trust and security. And that brings control to our hands so that all operators are all involved in this. And then whatever we are doing, we are using it to support the ecosystem. Thank you. Hello, I don't know if you can still hear me. I'm trying to keep to my 10 minutes. Dr. Yunuga.
see you will diplomatically return back 3. We can hear you, sir. Can you hear me?
Yes.
Can you hear me?
Yes, I can hear you. I don't know if you heard me. I spoke extensively about.
You can hear me?
Yes, clearly.
Oh, we heard you. I said you diplomatically returned 3 minutes back to me. That was the opportunity to grant Mr. Ajao some intro, because he's been looking at how he wants to jump into this interesting debate. But not his time yet. Not his time yet. He still has to keep his champagne on ice. As I bring Mr. Zegbe into the discourse, there's a lot, sir, that is happening. You've heard from Mr. Fasasi, you've heard from Vincent, but the question is that how does financial services improve the situation? Do you believe there's enough advocacy with the fiscal strategy on financial inclusion? Why would a market like Kenya has a 9% achievement and Nigeria is struggling? What's your own perspective, sir? Just take us to town on this. We're eager to hear your voice. Thank you very much, sir.
Thank you, Doctor. And thank you to my fellow panelists in this call. And
can you speak up a bit? Your volume seems to be low.
Can you hear me?
Yes, we can hear you now. It's better now, sir.
Okay. All right. So
and also, sir, for the audience, please start shooting in your questions, because this panel is eager to answer all your questions. Type it, ask us, go to town, deep dive, use the opportunity. We are waiting for it. Over to you, sir. Apologies for the interruption.
Thank you to NESG also for putting this together. I think to a large extent, by working, it's getting easier as I listen to everyone who has spoken before. So to your question, we think that we have the necessary industry benchmarks and the necessary. I would say yes. I mean, the keynote speaker did say something about the ASO Accord that was recently signed. To have a complete financial, any system that is completely financially inclusive would require, I would say, 3 tiers. And the first tier I would put at the governmental level. The second tier I would put at the level of financial services providers. And at the third tier I would put at the employers and those who are operators and within the system that are users of financial services. You will agree with me that you would say that there is a lot that are put into coming up with frameworks and policies that government has been driving for the past 12 years since the National Financial Inclusion Strategy was first put together, starting from when we started the 3-tiered KYC to where we are today. And indeed, those were the things that helped push the initial thrust of what we had seen. However, there still remains a lot of challenge. I think it was one of the speakers who was speaking, I do believe it was the first speaker who said, financial inclusion is not just about having accounts. There are bits, there are elements that go beyond just having an account. There are other non-financial indices that also affect the capacity to get financially included. So you speak about what happened in Kenya. One of the things that had driven financial inclusion in Kenya was the early adoption of digital. And we all know the story of Pesa and what it did to the economy, what it did to Kenya, and how the adoption rate. Someone also, one of our earlier speakers also spoke about the role of women in financial inclusion. I dare say that a lot of times when you consider the fact that women control a large chunk of the household expenditure that as we know it, having them financially included would therefore lead to
a significant rate of inclusion. And so one of the things that worked in Kenya also was the fact that early on, you had a lot of women who were also well financially included through the adoption of digital payments systems, the digital financial services. And I think that may seem like the gap that we had experienced in Nigeria for some time. We have this framework, we have these fiscal strategies, we have all of the government interventions, we have all of the financial institutions. But I would say it's perhaps in the last few years, given the entrance of the fintechs, that we had then seen a rapid uptake. And that is where what Mr. Vincent was speaking kind of came home for me, in the sense that the traditional banks and the fintechs now have to collaboratively work together to see that all of the benefits that have come through from what the fintechs have put, or what the agents have been able to do in all of the remote areas across the country, we are able to put our infrastructures together to build an ecosystem that then thrives on pushing what happens in trying to get people financially included. On the part of the traditional banks, I do think that there's still a lot of work that needs to be done in terms of moving ahead beyond the use of digital financial services, beyond the use of the agents and the agency model for how we do things. We also still have a lot of places where you don't have physical branches. And that is that for me is one of the critical elements that we would have to also consider, because there's still the element of trust. There's still this thing about when you see a physical bank structure, the trust it kind of elicits in the minds of people. Now, the statistics that was presented earlier on is anything to go by, we have several local government areas where we still don't have a traditional bank presence. Now, while banks will continue to do what they do in the urban areas, I think there is still the need to have a look at what is happening in those rural areas, where we can begin to say, where are the places where the opportunities exist for banks to expand into? And then this kind of creates and brings about the balance between what the traditional banks are doing and what the fintechs are doing. In my bank, for instance, I know that in the last 12 months, we've done somewhere in the region of 30 new branches in areas where, as part of the financial inclusion strategy, in areas where historically you do not have any bank, or the coverage is not sufficient. So those are some of the things that have been done, that have been done by the banks to meet those things. But to come back to the question you asked, Doctor, do I think that there is the policies do exist that should drive financial inclusion, the advocacy metrics for the strategy? Yes, I do think so. I think it is in the move from where we've been for many years to where we expect to get to, that we would then begin to more actively collaborate. I mean, the central bank has a lot of documents and policies and frameworks that have been in circulation. I mean, if you went through a lot of these documents, you'd see it's almost like we thought through everything. Perhaps what is missing today is, or why we haven't achieved the overall strategy of getting to 85%, is just that little bit of then putting all of the collaborative efforts together, so that we don't work in silos, like my friend Ajibade said. We don't work in silos. We don't have the fintechs doing their own thing, the banks, the traditional banks doing their own things, the microfinance doing their own things, and the agents doing their own things. There has to be some platforms that we can all collaboratively put our heads together. And I think this program is one of such many platforms that we can then use to take advantage of the opportunities that exist for us. Thank you, Doctor.
Very much, Ms. Zigwe. You touched on a lot of nuggets, and that nugget, I see you reframing it and tying everybody together. That was an excellent delivery. There's always been a white elephant in the room, and the white elephant are regulators. They're the ones that bring everybody together.
You mentioned, you touched on it in your closing remarks. Is everybody afraid of a CBN? Is the CBN now the problem child? Or are they the problem daddy? Well, we will know by asking our representative, who is not last and not least in this discussion panel, but carries all the gravitas of the regulation, Dr. Lubokola Akinwumi. Do you believe the policies are even well understood? You know, Mr. Zegbe mentioned, you have the banks, the fintech, you know, insurance, everybody doing their own thing, non-collaboration, according to Mr. Kibadi. And if yes, how can we measure the level of execution of this policy? For instance, the Naira redesign was what we will call in our local parlance, yam pepper scatter scatter. It both affected the digital and the non-digital citizens. A lot of people were impacted. So people understand this policy. What is the regulator doing or will have done better to improve a wider customer experience? Over to you, Doctor. Thank you very much.
Good afternoon, and thank you very much, Dr. Yenuga. I first would like to acknowledge various contributions that have been taking notes. It's also exciting to know that financial inclusion in recent time has been elevated to the point of having the president appointing an advisor, a technical advisor, to ensure that there is that we strengthen collaboration. And if you hear the strand of contributions that we've had all along, you'd see that collaboration is central to achieving financial inclusion in Nigeria. It's important to also highlight the fact that whenever we talk about the strategy in Nigeria, it is not just the Central Bank of Nigeria strategy. Rather, it is a national strategy developed by several stakeholders with strong inputs from various regulators, development partners, and government agencies, operators, as well as users of financial services. So in terms of whether there is an understanding of what the strategy is there for, I would say yes, because this is not a top-down approach to strategy. It is rather something that we came about after various engagements with various stakeholders. Yes, there is the path for the regulator to play. And so there are two key principles that drive the implementation of the financial inclusion strategy. The first one being that we look at the risk-based approach to policy making and even regulation, as well as also ensuring that various stakeholders take responsibility for aspects that play to their own strength. In which case, the mobile money operator, for example, will leverage its own strength in terms of digital financial services, while the agents also ensure that the association bank agents also provide services that target and address the aspect that they are better suited to handle. Similarly, on the regulatory side, the Central Bank of Nigeria will focus definitely on the areas that it can intervene effectively on, while also those in other subsectors of the financial system, such as the capital market, the insurance, NICOM, also play. But at the end of the day, what is critical is coherence and consistency. I think it was Mr. Fasasi that mentioned earlier that consistency is a key word in financial inclusion. I think beyond being a key word, it is actually a principle that we must abide with. And if you look at what has worked over time, I'll use the efforts towards agency banking and the tiered KYC as an example. Agency banking 2013 was the first guideline, the first guideline was issued. Before that guideline was issued, the only other regulation that talked about agency or agents services was the mobile money regulatory framework. In 2013, it was considered necessary to take it a notch higher and ensure that all participants that are able to play in that space, are given the opportunity to do so. So the banks, it was opened up for banks, microfinance banks, and other non-banks. 2015, an incremental approach, by saying, okay, let's have a shared agent network that will further deepen the success that we were seeing bubbling up as at that time in this agency space. And layered on that is the fact that we have the bank verification number, which also was standing in a place to ensure identification at bank level. All this put together, plus the cashless policy, drove a lot of adoption. And by the time we got to during the COVID period, of course, it became very, very important that digital financial services be leveraged. This consistent and incremental approach to enhancing regulation delivered the successes that we have seen going by the FINA report of 2023. In fact, it was clearly stated that the agency banking is the touch point that had greatest impact in terms of inclusion. It is not something we came by within a short period. It has been a strategy that was consistently and coherently implemented with all stakeholders brought together to support the achievement. And that is very critical to whatever we do at any point in time. Now, if you look, you mentioned the case of the Naira redesign, and I would not shy away from discussing that. Rather, I would say that one experience or lesson learned in that period was the fact that it is essential for all stakeholders to understand that as adoption or usage increases, we also need to enhance our capabilities as well as the capacity to support the rate of adoption in order not to dampen the enthusiasm as well as the confidence and trust of the users. So when we talk about the resilience of the payment system, which is the financial market infrastructure that bears the weight of all that we are talking about at the moment, we realize that there is need to incrementally, expand that infrastructure to meet up with adoption and usage. And in doing so, you find that there is the part for regulation, but more importantly, there is that part for operators to also recognize the fact that it is important and good for business to expand capacity as long as usage is increasing and profitability is also increasing. So when we talk about the regulatory side, you see the regulator opening up opportunities for licensing more switches, payment service providers. Even payment service bank came on board. Mobile money regulation was enhanced. We had several other regulations to bring in fintechs to support. But what's the quantum of real investment? So we need to start looking at it. Are we allowing investors to come in, cash out, or we are actually getting real investment in the private sector side to actually support the business in the long term? So these are some of the things we may need to do better. And of course, from the regulatory and the policy perspective, we are looking at ways of consistently monitoring the resilience of the infrastructure and also to challenge operators, to scale up in terms of infrastructural, to address infrastructure deficit. But again, it is important, like I said earlier, that collaboration is key, and everybody should play to its strengths. There is a limit to what there may be certain what do you call it? Certain constraints also on the part of the operators with respect to, for example, infrastructure, the general infrastructure in the country. So we need to pay attention to that. Electricity, for example, when we talk about costs to customers, it will impact on it. But if you talk about information and communication technology, if there are drop calls everywhere, definitely we are riding, the payment system is riding on those infrastructure. If there are challenges there, it will reflect. So we have to begin to look at how to enhance all those as well. So the fiscal side, and I'm happy that the technical advisor is also here. The fiscal side will have to also continue to strengthen, efforts in those directions. And then lastly, let me say that there is also room for more transformational initiative, even as we speak. The Central Bank of Nigeria, 2 years ago or so, issued the first regulatory framework on open banking in Africa, and followed up with that last year with the operational guidelines to implement that. This is a starting point of another initiative that can take us further and that will address at once several aspects of financial system rather than just the banking and the payment side. For example, imagine a world where the information that is available to the telcos about customers and those available to the microfinance banks about their customers, those available to the metering companies or the distribution companies about their customers, those available to the bank, and the likes, coming together to provide a rich repository of information about individuals, which market operators can dissect, and coupled with the various technological advancements such as artificial intelligence, we can then begin to dimension customized, appropriately suited products specifically for different segments. For example, you talk about the gender issue, female, the female population. You talk about say the various regional or geographical balancing that we need to achieve. We begin to see information that maybe, while there may be deficient information in terms of banking in certain region, there may be robust information in terms of telco usage in those areas. When all these come together and we have a melting point of such information, coupled with the very available emerging technology, artificial intelligence, and open data, which I would say we'll eventually get to, you begin to see better approach to bringing in more people. And of course, it also expands the infrastructure, because using open API, you may as well, further expand the other channel of infrastructure as opposed to the traditional settlement channel. Switching and settlement channel, switching, clearing, and settlement channel that we currently operate. So there is that opportunity that we still need to explore, but that opportunity will only be attainable or achievable where all collaborators, all stakeholders really play their part and play to their strength and work together to ensure that coherently and consistently we address all the barriers that is impeding financial inclusion in Nigeria. Thank you.
Thank you very much. Spoken eloquently like a regulator. I really enjoyed that, Dr. Akinwumi. You anchored on collaboration. There's a lot that the government is doing. Even the appointment of a technical advisor in that space as well, in the Vice President's office, shows that underpinning credence to this topic I cannot say anything short of excellent performance from this panel. Thank you very much. And we should give a resounding virtual clap to everyone for going through this journey with me in the last 1 hour. Really, really interesting. I think three things as I close is the fact that we're not short of ideas of how to solve the problem. We know what the problems are. We have policies, we have strategies, and we have execution, and we have the brains to make it happen. So well done to Nigerian, well done to this committee. I've not seen a lot of questions, and I think the audience should be bombarding us with Q&As now. I was a bit concerned when I didn't see a lot of questions coming through. I thought maybe we've scared our audience. I don't know what Mr. Ajayo has done to them because he's the one coming up next. But as we seek question and answer and contribution and comments as well, just to show that it's been a robust and deep dive discussion on financial inclusion. I also want to rehearse again our female counterparts play a pivotal role. Very hardware-centric panel is full of men. And I told them, well, there's software as well. But the other thing is that the women were invited and some things happen where they can't join. But we know that they're here with us in spirit and virtually. So kudos to our female as well. In fact, if I want to work in any bank, I want to lend money to women because they pay back. They think of their businesses, they think of their children. But men, portfolio at risk. Vincent can tell me that from Action is always an issue. Well done to everyone, all our panelists, our keynote speaker, and the welcome address. We really appreciate the timing. Now let's anchor in Mr. Ajayo as we also look at questions. I will be bringing the question in, but I'm sure he has a lot to unpack. He breathes, he lives, and moves financial inclusion. Mr. Ajayo, over to you, sir.
Thank you, Dr. Yeniga. Thank you, our dear moderator. And I want to appreciate all our panelists and our keynote speaker for making that time to have this conversation. I'm very happy at what I'm hearing here, and my notebook here is full as I'm hearing things, I'm jotting things down. The question of financial inclusion for me is so key, because studies have shown that where there's effective financial inclusion, there should nothing called poverty. There should be nothing called poverty should not even be around at all. Because when you have a human being that is that has the right capacities, have the skill to do something, and is willing to do, finance should not be a limitation of any sort. Because if that human being is able to articulate what he wants to do to generate wealth, present it before lenders, people to get good finance and start business and start creating wealth, start employing people, and somehow the national economy continue to grow. So we can never overemphasize, or we can never have too many events around financial inclusion. So that one reason why I'm so happy at today's session. I speak on behalf of the Financial Inclusion Thematic Group of the NESG. There are over, I think, up to 26 of the thematic groups within NESG, each one addressing different aspects of our economy. And this is what we have been discussing since 2017 that we started. We have about 20 of us, and we're still welcoming more members. So in case you have interest in this area, you want to join us, please reach out to NESG. We come together every now and then to look at what is the trends, the financial inclusion in Nigeria, what are the obstacles, and we're deliberating on possible solutions. And in fact, right there within our group, we're able to challenge ourselves because we have regulators represented, we have operators represented, we have a consumer represented, like Mr. Bazasi here is a very key member of our thematic group. So we discuss all things. We have SANEF in the working group. So each time we discuss, we're able to come up, we're able to look at what are the problems all the players are facing. We're able to discuss possible solutions, and we're able to assign tasks to members. Oh, SANFC, agents said they're having this problem. See what you can do about it and report back at our next meeting. Oh, the CBN rep, see what the people are complaining about. bankers in our midst, see what people are complaining about, fintechs in our midst. And for me, that really gives me so much joy because each time we meet, we're then able to follow up. And gradually, as I think Dr. Akumi made that point very clearly, Mr. Fasasi too said it clearly, that a lot has been done in this industry in the past decade in particular, and we can see the results. Things are moving better, but despite that, I'm happy that all panelists acknowledge the fact that, yes, we've gone this far. Yes, e-payment is going very well. Yes, there are over 2 million agents across all local governments in this country. Yes, number of accounts, the volume of accounts, they are growing. CBN NIPS reported recently in the public domain, there are over 65 million BVNs. So of now, NIMSI told us they have almost about close to 130, about 130 million NIMs have been generated. So these numbers keep growing. But I think what we as stakeholders need to continue to deliberate upon is effective financial inclusion. We are seeing reports that many of the accounts or wallets opened by by Nigerians are going dormant. Why are they going dormant? We're hearing reports that many are going back to cash. What is the issue? So I'm happy that in this meeting, we're able to discuss a lot about initiatives that are ongoing by different stakeholders, as individual operators and even as groups. And at the same time, we're coming up with additional things that can be done. I love the idea of, I think Mr. Vincent talking about, and Mr. Fasasi spoke about this, that we need to monitor. Yes, there are standard sets. The CBN has come up with regulations, customer service level, or dispute resolution. If there's a dispute on ATM or POS, there's a maximum period, is 48 hours on ATM, I think, 72 hours on POS. Are we monitoring this? How do we monitor this better? This is something I wish we can discuss here. How do we ensure we monitor this better? Mr. Fasasi suggested an independent party, which makes so much sense, to really monitor so that we will see how well are we complying with those standards so that we don't depend on, only when people come to complain. Is there a way we can come up with a very clear monitoring mechanism so that month by month, quarter by quarter, we can say, see where we were last quarter, see where we are now. This is our next target. Who are the players that are lagging behind? How do we bring them on board? How do we ensure, without talking about sanctions per se, but just to ensure that together we're all moving on for the benefit of citizens of this country so that financial inclusion can grow and financial inclusion work well. The economy grows, the economic inclusion will follow. And in total, the country will be doing much better than we are right now. Thank you, Dr. Inuka, for the opportunity to contribute to the conversation.
Thank you very much, sir. I think we've now opened the deluge of questions. Your contribution, Mr. Ajao, is always remarkable. Thank you very much for that. I will actually try and read out some of the questions and then try and allocate, or any of the panelists that can pick it up. So the first one from Mr. Kola says a lot of agents are still in major cities and lucrative areas. We mentioned that. What is the best way to reach women in low-income communities without access to internet and financial services? That's question number one. Question number two, the cost of digital, which includes data and transfer, continues to hinder or discourage many low-income women. You find out that this is coming from Kola, but is one of the female advocates. Fantastic, Kola, well done. How do you overcome these barriers? She's talking about cost of data for women, low income. What financial products or services currently serve low income best in Nigeria today? Many women in rural and peri-urban communities are scared of going to get loan because of massive interest, and thereby they cannot start or sustain a business. Women's savings group are coming up every day. What is the best way commercial bank, microfinance bank, or CBN evolve to better serve this savings group with financial reality of the different for our current tier financial system? So question number two,
we'll actually go to well, let's see. Let's try Mr. Jibade for question number 2. The cost of digital and data transfer hinder or discourage many low-income women. I see you're a women champion here. What can you do that? How can we prevent? How can we help them? Question number 3. I want to take question number 3 to Vincent, because I remember there's a package for women in my ISO Microfinance Bank. What products and services? Question number 4, definitely to CBN. They are not going to run away from it. Dr. Akinwumi. Savings group come every day. How do we, ensure the financial systems accommodate them? And a lot of agencies are still in major areas. What is the best way to reach women? That goes to Mr. Fasasi. Mr. Vincent, let's hear you, and then we'll take it in that order.
Okay, thank you very much, Dr. Inuga. If I heard that question correctly, it's essentially around the interest rates, the high cost of borrowing to women and to the general public. I think we need to approach this from both physical policies and also looking at those involved in financial services, how the cost of funding to them. At the last mile, there are a number of policies that we know, as Mr. Fasasi has shared with us earlier on, and Mr. Zanu has also shared with us, coming from the federal and the state levels. These funds have to be made available, and essentially, we need to work through the financial service providers to reach out to these deserving citizens who want to finance their businesses, especially the women that want to drive their businesses. A lot of those funds made available is best channeled through financial institutions. And I'm sure that is what is currently going on. Again, we cannot divulge the cost of lending from the Nigerian society. We all know what the MPR is today, and this cost will essentially have to come in. And of course, obviously the donor funds that are coming to support activities of low-income earners, small and micro entrepreneurs. These funds are better channeled and through financial institutions, the microfinance bank institutions, and all of them. Like you said, we've had at Action, we've had something like this in the past, where we partnered with the central bank to deliver this to deserving people in the economy, the demographics, the women. And for us, it was a very, very successful partnership that happened back then.
Okay, thank you very much. Mr. Fasasi.
Okay, thank you so much. I think I will just quickly respond to the area of the question that has to do with the localization of agents. That we now have more agents in cities than the rural areas. And we actually need them more at the rural than the cities. There are this conversation around breaking even, because for agents are also business people. They are not getting any incentives from any government whatsoever. The highest cost to serve of agent today is actually the cost of capital. An agent of a bank A is not getting credit from a bank A because they don't see his business or our business as a business that they can invest in, because our business is more of service than making profits. So agents actually started from rural, targeting most of the rural areas in Nigeria. But when they couldn't break even, they have to come and be competing in the cities. So you have, large sum of them in the city. And this is what association is trying to also do, working with partners to now strategically position viable agent in those excluded areas in Nigeria. It's actually not that we don't have agents in most of those rural areas. We have them, but they are not viable. What do I mean by that? You find agent trading with a capital of 10,000 naira. So once a customer just walks in and collect the 10,000 naira, shut down and travel over 300 kilometers to go and look for another cash. So we are positioning Neighborhood Financial Inclusion Center a more viable, a more, that can support those, kind of agents, so they can quickly rush back to the NFIC center, get their funds, and go back. So I think with time we will achieve that spread that we are looking at, and we are also talking to CBN. So there are a lot of grants, there are a lot of funding that can be used to incentivize the agent spread in the rural areas. Thank you.
Thank you very much, sir. I think that you've also helped me kill a bird with two birds with one stone. You've actually answered Mr. Shodunke's Yusuf's question as well. I was talking about location and agent, but that, like I said, that's always a big elephant in the room. Is how does CBN evolve all this? Because that's the next question that talks. A lot of panelists emphasize the need for collaboration among stakeholders, but the manner of implementing these various transfers and palliative cash measures do not reflect collaboration. CBN, how do we champion collaboration? This is now putting you under the stethoscope, under the microscope, sir. Dr. Akinwumi, please.
Thank you very much, Doctor. Well, collaboration is always work in progress. I mean, to put it this way, when two people get married, they improve in their relationship with time. And I think we've been seeing that. But again, it's important that certain things are agreed as basic consensus. For example, information sharing. And I spoke about open data the other time rather than open banking. If information required for us to take necessary measures as when critical to do is available to all collaborators, for example, all stakeholders, then you begin to see more responsive actions being taken. So I'll paint an example. If from the operators, the market players, we see accurate data in terms of the fraud levels, we are able to engage the the law enforcement agencies who are also partners in that space to begin to review better what could have been the root causes of some of these things, and that feeds back to policy as well. So there is need for information sharing. We need to share information better. Secondly, it's important that the Central Bank of Nigeria has actually provided the convening platform over the years. But again, with the recent elevation of the matter, it may be an avenue of opportunity to also, get more people to be more open and more collaborative, where it is known to all that it has become a priority, not just a central bank strategy, but a strategy for the nation, which impacts on the well-being of the people. Then there will be more openness in terms of collaboration. I think lastly is to also say that the more we begin to look at the users and we dimension solutions that positively impact users, and we keep them as the focus, it will be easier for us to collaborate. So it's understandable for the private sector person to be thinking profits. it's understandable also maybe for the regulator to be thinking financial system stability. But these are not mutually exclusive objectives. We can achieve both while collaborating, and it is in the bid to achieve financial stability that will keep the business of the operator going. So it's something that we need to come to that understanding that it is better for everyone, whether you're in the regulatory business or in the business of making profit, to collaborate. Thank you.
Thank you very much. Mr. Jibade, you hold me one answer. Over to you, sir.
I don't know if you can still hear me.
Yes, we can hear you on pricing.
Oh, yeah, the question of pricing. I probably, unfortunately, don't agree with the person who threw that question. The regulator, the CBN has done very well for the market. Nigeria is the only place where all subsidy has been removed from every part. Petrol used to be 98 naira, now 600 and something naira. Even federal government has removed subsidy. Hotels that used to cost 40,000 naira in LPA region, that's Lagos, Port Harcourt, and Abuja, now going to 200,000. Flight from Lagos to Abuja that used to be 30,000 naira before, is now 300 and something thousand naira. Yet, the central bank has refused the banking industry to increase the pricing of some things. Like cards has always been 1,000 naira when dollar was 250. Today, that dollar is in excess of 1,000 something. Cards is still 1,000 naira. The real cost of that card production to banks should be in the neighborhood of 3,000 naira. Token that used to be 2005 at that time is 2005. The real cost of that thing is 10,000 naira. Meanwhile, the fund cost of transferring funds from one location to the other is still 10 naira to 15 naira, depending on the amount you are transferring. But Nigerians prefer to go to Mr. Futarafa James people, to go and collect that money at 300,000 naira plus extra charges. And yet to say that cost to data transactions is expensive, I don't agree. Because the numbers are there, the situations are there. What we need to do is to jointly educate our people to say that thing that you need cash for can be done electronically in a very cheaper way. Because the central bank keeps banking industry is the only one that has been subsidizing this country, even when all subsidy has been removed. So I beg to differ with the person who threw that question. I'm not sure that that's correct to say the cost of digital transactions are expensive.
And fantastic answer. That's why we have like open debate. That's why we have this kind of webinar that everybody has is pros and cons, differ, for and against, and then we'll arrive at something that works. Because something that works is what I'm coming to Mr. Abraham Ezekiel. Somebody believes that all the regulations, all the financial innovations, blockchain, artificial intelligence, and things like that, fostering cross-border payment, is taking the government agencies too long to address this and providing clear regulations. Do you believe this, sir? And if not, how can we take this forward? The question came from Samuel.
Thank you, Doctor. And very interesting question.
Mr. Zegbe.
Can I be heard? Am I audible?
Oh.
Okay.
Yes,
so
please.
I was saying thank
you,
Doctor. Thank you for that question. That's an interesting question. During the course of this whole conversation, we said, I think it's not for a lack of perhaps the will. I also don't think that every regulation or every change must come from a government agency to address. And I think that's this whole webinar and programs like this just strengthen that belief that this question of collaboration. In fact, there are many initiatives in this industry today that were never started by regulators or governments. They were things that were led by industry players, either the banks or maybe the fintechs or maybe the agents. So if there are things, and that is why the whole place for advocacy, of course, would become very critical. With working with a platform like the NESG, we identify things that need to be elevated to that level. And thankfully, it does seem, I mean, clearly from the very top, i.e. at the federal government level, there is an active interest in financial inclusion, the growth of the economy, and a lot of the things that are desired to be achieved. I think the place of collaboration, I'll go back to that same point of collaboration. And I do believe that when Dr. Akiwumi was speaking, he said everybody has relative strengths in different areas, and those strengths must be put together. Now, if there are areas where there is a need to then say, we need to bring about this change, address this dilemma of a clear regulation on market integrity, for example, it is us, the players within the industry. It is us that would then initiate those conversations. And so I think it's not just about whether or not the government or whether or not the government agencies are doing anything. It is that how well have we been able to articulate our activities and then put forth a position that obviously would either from the regulatory standpoint or from the government standpoint become the basis for that change that we want to see. Thank you very much, Doctor.
Thank you very much, sir. I want to make a bonus question out there to anyone that wants to build a cat, and it's from Dr. Obioha Oti. He says that the directive from CAC mandating all agency bankers and mobile money agents for compulsory registration, he has a problem with it. Small agents operating as individuals in remote location. Is this directive not anti-financial inclusion? Is contrary to the agency banking from CBN and even from CAMA 2020. Who wants to build this card? I even think our keynote speaker can jump into this as well. But I can see Mr. Sharafuddin, his hands is up. Whilst you're on that, sir, maybe you want to take the second question. Oluwole Aziz says is the immediate national treasurer of AMBAN, and telecoms play a vital role in digital financial services, but the attention on the sector is very low. Fraudulent activities most route their services. What is the regulation body doing about this? Over to you, Mr. Sharafuddin. So you have two double-barrel questions to answer. But I also want to hear from Dr. Nuruddin as well. Thank you. Mr. Fasasi, over to you, sir.
Hello. Can you hear me?
Yes, we can hear you, sir.
Can you hear me?
Yes,
okay,
sir.
Thank you so much. You can see I quickly jump on the CAC issue because my association actually dragged CAC to court based on their policy declaration. So I think what is important, we saw it as an attack on financial inclusion for CAC to come and make a general policy proclamation that every Dick and Harry, whether you are a sub-agent, you are individual agent, you are, then everybody must be registered with CAC, which is exactly not what the memo of the Central Bank of Nigeria and the regulation of the Central Bank of Nigeria says. There are provisions for sub-agent, individual agent. The memo of the CBS clearly states that if non-individual that are operating in the name of business name, you can't operate, it's illegal without registering. The implication of this is if you are Adu Enterprises and you have that on your signage and you're operating like that and you are not found on the books of CAC, that is illegal. You have to register. That is what CBN is saying. But if it is Adu Adamu is an individual. And the way agency banking is structured, you have aggregators with a lot of network of branches. They are fully registered with CAC. They are even limited liability companies, and they have agent locations. So are we now saying that those locations should now go and register with CAC? And that is where they actually got it wrong. And that has actually disrupted the industry. And we took them to court to seek the CAMA interpretation, which also is about mandating only for people that are operating as business, not as individuals. So we are still in court, quite all right. And I think for us, we always refer to CBN memo on that. Then on the issue of telcos, I think Nigeria is a unique market. It's actually a unique market. If we remember very well, we started with a sort of a telco initiative, mobile money, where we just copy and pasted what has worked in Southeast African countries and pizza and all these other segments of it. So we just copied and pasted, and it didn't fly. And our own model naturally evolved. And now that's the model of agency banking. And today, even a licensed mobile money provider today is operating agency banking to survive in the business. So, but they also have a role. I think it's a gradual pay. We are at a stage where we can actually transform and accommodate more mobile network operators to play. Because as you move towards cashless society, telcos, we have a very big market share in that space. And it's also a challenge to them to also work and improve on connectivity, infrastructures, because you can't go digital, fully digital and telco-led with 50% internet penetration. And there are a lot of models, even if you cannot lay cables, there are transistor radios, there are old transistor radios. They can partner with us to have those kind of, modular connectivity, a station across all the 8,609 watts in Nigeria. We can run that with them. But, a lot of people don't believe, a lot of site providers don't believe that Nigeria's strategy is a unique strategy. You have to sit down and you redesign it. That is the only way that can make you to fly. Thank you.
Fantastic. Thank you very much. I have a last comment from Dr. Akinwumi, whose hand has been up. Begin to roll. Yes, sir.
Okay. Thank you.
Sir. Okay. So let's take our keynote speaker and we'll take Dr. Akinwumi.
Okay, thank you so much, moderator. I'm happy that you actually called me back to say one or two things, even though I'm not a panelist, but I think it's in line. Okay, thank you so much. So a lot of questions that have been raised. I think one of the key questions that struck my attention is that of ongoing issues in terms of corruption, in terms of other misgivings, of course, leverage on the agent banking and all that. Well, for us, I tried to be a little bit more, to summarize the whole thing when I was making my keynote speech. But then again, I just want the panelists as well as the participants to know, there are a couple of issues that we're actually doing. A lot of them actually used to be published, in the public space, especially through our State House press release. To address these issues, we are partnering with all the stakeholders. At least I'm proud to say that, of course, I'm a product of Central Bank. At least Mr. Akiumu, who is representing the bank here, we are quite known. I've been a player also in this financial inclusion space for a very long time. I could remember when Dr. Akiwumi and I actually represented the Central Bank in the Africa Enablers Summit. We realized that Nigeria is actually doing a lot, despite the fact that a lot of other initiatives going on in other African countries, but we too here, we're not doing bad. But at the same time, there's always the need, for us to make it better. So now, among the initiatives we're taking so seriously, I think you would have seen recent release about a study tour that was conveyed actually by the Office of the Vice President, of course, under my convenership in partnership with other. We tried to study the top-notch, the global players in the fintech space, as well as the agent banking. We put in place the regulators as well as the law enforcement agencies. The entire ecosystem actually participated. We have and there are also some market players that, that were interested. I'm sure Amban was fully there and he also attests to that. This is also part of the collaboration we're doing with them. And at the same time, we have Central Bank, NFIU, NIDA, we have EFCC, ONSA, DSS, Nigerian Police, Civil Defense, and all that. What is the objective of doing all of that? I think for me, it's part of my mandate actually to bring the regulators and the law enforcement agency to sit on the same table for us to have a better understanding of the operations of each individual. Because now, the innocent agent that is in the field, in the village, has been presented by Mr. Fasasi. He's doing his legitimate business. Of course, his level of financial literacy is somewhere that requires that certification that he spoke about, which is a very good one. Do you understand? So now he's doing his legitimate business, but because of certain operation, because of some level of understanding that might be lacking, you will see some law enforcement agency could actually be trying to find out. Even them, if you look at it, they're actually doing their work. So, but now it becomes duty on us, at the apex part of the government, who try to bring these players together on a table. They have to discuss among themselves and understand why they are doing what they are doing. Another thing again here is that we've been able to do that, and we are trying to cascade it down, because for that one, we took the management, staff of those agencies, they all participate, and it was a very fantastic one. In fact, to tell you, any moment we're going to do another communique to that effect, you understand, to see what are the next steps, then how can we also make the industry better? I know that the Central Bank, I'm ever proud that they are doing a lot of initiatives, they are doing a lot of engagement. Dr. Akumi has mentioned it very clearly, but we are also engaging with them, to see that how can we make it better. Now, this issue of corruption, I think if we can be able to, all these cyber issues, and all that, if we can bring it to the barest minimum, I'm sure it will boost the confidence of the people, for them to be able to leverage on technology to enhance our payment system in the country. And that is one of the issues we're actually, in fact, in addition to that, very soon, a training is also going to be, is going to commence that include even the operators within that space, so that it can get down, including all the participants in that space, so that they would have a very clear understanding. And also from the central bank side, we are also partnering with them to see how we can, of course, enhance the current, the current agent banking platform and other platforms in other initiatives that have been operated over time, so that we can review what is the current position, how can we make it better, what are the challenges, looking at the technology and timing and all that. So it's a very fantastic platform we are also doing. So what I would say again now is that Nigerian Economic Summit Group, I'm sure Mr. Ni has also participated in our workshop in Lagos, on behalf of NESG. The whole aim was to interrogate our operating model. We're trying to bring in an operating model. Central Bank, of course, is already taking the lead in doing everything fantastic. But for us at the State House, what can we do to make it better? Just to be able to come up with the high level, at the policy level to support this ecosystem. So please, finally, I would like to implore, the NESG to keep, because for us, our doors are open. Let's keep communicating. If there's any event, and please, I'm just a phone call away. I'm pretty much available even without long notice. So I can be able to come in and participate physically or virtually, so that we can see how we can together, support this ecosystem, so that we can make it better, of course, for every Nigerian talking to us or watching us in this call. Thank you so much, gentlemen. Good morning once again, or good afternoon, as the case may be.
Thank you very much, Dr. Nuruddin. Dr. Akumi, last note from you, sir, as we round up this beautiful session of Q&A.
Thank you very much, Dr. Yenuga. This is very important that I quickly make this correction, because this is a platform that informs as well. It's important to note that at no time did our policy on mobile money represent a copy and paste. If you look at what happened in Kenya, like Mr. Fasasi rightly said, it was telco-led. The very first mobile money policy in Nigeria had nothing like telco-led. So it couldn't have been a copy and paste. It took a while for development partners to engage consistently before the bank brought in Payment Service Bank, which then allowed or gave a window for the telcos to participate. And of course, that is in the light of ensuring that we have a robust environment for and a conducive one for all operators that can make positive impact, participate within the financial system. So it's important I make that clarity. Agency banking, very clearly, like I mentioned earlier, was first mentioned even in that mobile money regulatory framework, which was released in 2009, and of course, improved upon over time from 2013 with the agency banking guideline to the shared agent network framework. Lastly, it's important to also say that the Corporate Affairs Commission is also sits on the Financial System Regulatory Coordinating Committee, and there is avenue for things to be addressed in order to ensure that the law as it is enshrined is also implemented in a way that will not necessarily impede impede the progress made. And that engagement, I believe Dr. Nuruddin Zaru will also be fully involved in managing those collaborative, those aspects of collaboration that we need to quickly fix. Lastly, there was a question because we were mindful of the female counterparts. However, I think there was a question asked about savings group of women, which you had earlier highlighted that I should address. I'm not too sure I'd addressed that. I think it's important for us to know that and to appreciate the fact that the current strategy talks about linkages. So there may be savings group, but there are also institutions that can bring those savings group and ensure that they are better organized and integrated into the formal financial services platform. Also, it's important to state that we have to be mindful of what savings group or Ponzi scheme disguising or masquerading as savings group. So there is need for more education around how savings group are organized and linked into the financial, the formal financial system. Especially, we know that MFIs, microfinance institutions, that may not necessarily be microfinance bank, also help in organizing such savings groups, and women can also explore that. There is a fintech I also know that is basically focused on women. So these are opportunities to ensure that the efforts or initiatives directed at women with respect to savings groups are properly managed, and it does not constitute an avenue for women being defrauded. Thank you.
Thank you very much, Dr. Akinwumi. That's fantastic curtain call. It's been a very interesting journey last 2 hours when we started this brilliant webinar on financial inclusion. The role of banks and financial services is quite, I've learned a lot, and I hope the audience and everybody has learned a lot as well. And to our esteemed panel of panelists, as well as keynote speaker, I say kudos to you for a brilliant work done. This has been an elite team of contribution. Before I hand over to Mr. Ajayo for closing remarks, let me read the last statement, our contribution from one of our participants. His name is Babatunde Adejeji. Says 300 local government with bank branches out of 774 local government is not good news for financial inclusion program in Nigeria. I also acknowledge that many rural areas are not adequately covered with POS agents, and this is not good news. He also suggested that commercial banks should partner and register NGOs in each LGAs in Nigeria, create clusters for the uncovered community. Mini micro banks should be floated. He is a concerned CEO of consumer empowerment. And with that, I anchor my boat to Mr. Ajayo for the closing remarks. Over to you, sir.
Thank you, moderator. I don't know if you don't mind, as this Sadiq's hand up, is a NESG anchor. Maybe he has some points or information for us.
Okay. We have the floor, sir.
Sadiq, your hand is up. You want to speak? Okay. 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 Otherwise, I'll just go on. He has lowered his hand now. Okay. I think we've come to the end of this session. It's been a very, very interesting and productive, insightful session. I want to thank everyone who has participated, and most importantly, I thank all our resource personnel. The Financial and Thematic Group of the NSG set this seminar up as one of our pre-summit seminars. And the justification is very clear, and I'm happy that today we've addressed all that very well. Let me explain again, like our moderator has rightly said, why we don't have ladies on the platform among our panelists. When we were planning this, we thought we had 2 ladies on the platform because the chairman of Committee of Head of Bank Operations, until recently used to be a lady. The chairman of CB, Committee of E-Bank here, used to be a lady. So we thought we had 2 ladies. When we were sending invitations, we noticed that, okay, those offices have changed. So please, audience, please, just to provide more clarity there, we don't in any way have any bias towards or against women in any way. Because really, you cannot discuss financial inclusion without bringing women into the room. As Mr. Fasasi himself will confirm, among his members, there are very many women there doing marvelous things, including banking and all that. And one major justification, just without, with the risk of repeating myself, but it's good to make this point, that one of the reasons that made us to really pick this topic is the fact that, the last FINA report, 2023, says financial inclusion has grown to 74%, meaning that 74% of adult Nigerians are now financially included. They have bank accounts, they have wallets, they're able to do all those things. But despite that, we also saw what happened during the currency redesign project. Bank account holders were the one saying we cannot live our life without collecting our cash from the bank branches. But for us, financial inclusion includes going a bit cashless. Most of the spending we want to do should be coming from our wallet, from our bank accounts. So we're wondering, how come with the high rate of financial inclusion, there's still so much dependence on cash? And the Global Payment Report 2024 was just released. I don't know how many of us have seen it. If you Google it, a very, very insightful report that gives a picture of payments worldwide as of 2023 with some projections in 2027. In that report, it is stated clearly that worldwide, the volume of payments, transactions that happened in 2023, 16% of them were done in cash globally. And that is projected to drop to 11% by 2027. Now, that report now picks each geopolitical zone, each country for further analysis. What they wrote on Nigeria is very, very instructive. They said in 2023, 55% of financial transactions in Nigeria were done by cash. And that is projected to drop to a mere 47% by 2027. Yet, we say we have gone financially included. So these are the things that are really running in our mind about saying, okay, let's find out what could be the problem. We know the rate of dormant accounts, as our bankers here will tell, is so high. But I'm happy that this session, this our 2+ hour session, has actually addressed these issues. We are now being told by panelists, we have a list of ongoing initiatives across the country, many in collaboration among stakeholders, some by individual stakeholders. Dr. Zauro, our keynote speaker, has talked about the ASO Accord that was signed recently. The Financial and Thematic Group is working closely with him to see how we can support the government to realize all this objective of growing financial inclusion and economic inclusion. Because for Dr. Zauro, the question goes beyond financial inclusion. He's focusing on economic inclusion and financial inclusion, which I find very, very amazing. So we've heard from Mr. Vazze about the NFIS, Financial Inclusion Centers, happening in those locations where there are no bank branches. I think that's amazing. We've heard about Abraham told us about, ordinarily you would think that banks have stopped setting up bank branches, but he made it clear that because banking is about trust, the average person sees trust when they see a structure of a bank. I mean, he told us recently the Access Bank opened about 30 branches. So it's heartwarming to know that these things are going on. Mr. Falazi told us about the Agent Joint Task Force. Very amazing. Dr. Akinwumi has told us about the different regulations in place. Very amazing. I think it's heartwarming to see that all these are happening. But at the same time, we have heard here many new things we need to do. All the things we've done in the past have carried those far, very good, but we can still do much more. I mean, 55% cash transactions has to come down drastically. If it comes down, it's better for everybody. There's better economic inclusion. Even stakeholders will get the services better patronized. We've heard that collaboration we need to have more collaboration among stakeholders. We need to do much more about that. Bank agents need to be very more empowered. There are more than 2 million agents across the country. They are in all local government areas. We have been discussing within a thematic group. Can we ask banks to try and push more of their transactions to these agents, at least agents that meet certain requirements? I mean, today we know some agents will do BVN enrollment. Can I go to my agent and go and complain about a dispute instead of going to a bank branch? Can I go there to go and ask for my car replacement? Those things we believe, I mean, they've all come up in this conversation. And then we heard clearly too that we need to set standards. And where the standard already exists, we need to have a very clear monitoring mechanism. Monitoring by unbiased bodies who could let us know how far we go. If we're saying transaction failure rate, we don't want it to be, maybe it's 15%, or we don't want it to be more than 15%, 10% cross-board. Can we have a mechanism of monitoring that so that if we see a player that is moving above that, it's not about sanction now. It's sitting down with the player to say, what are our challenges? How can the industry help? So that in general, everybody will be, the entire country will begin to enjoy better the benefits of financial inclusion. I want to assure us, as I think Dr. Zaro threw a challenge at the beginning in his keynote speech, is very, very important, that we should not just leave at the level of talking. We should articulate our recommendations in the communique. He has said this, he will be ready to get a copy of that to see where he can help out to get those things implemented. We'll do all this and share among every one of us, the panelists, the regulator, the bank, so that all of us can work together to see how we can work together to grow that. So finally, I want to thank our keynote speaker. I want to thank our moderator. I want to thank all our panelists. Thank you for answering our call. I want to thank our board member, NES board member that gave the opening remark. I want to thank all our NESG resource personnel. They've made this very successful. Thank you all, Mr. Sadiq, Debbie, AC, everybody there. Thank you so much for being part of this. So we'll go on at the thematic group level to carry the discussion forward. So once again, I want to encourage every one of us participating who wants to join us in the thematic group or any of the NESG thematic groups. We already have in the chat box the link to apply to join. It's a volunteer association. We'll work together to see how we can contribute our own quota to grow banking and payment, to grow the economy in general. And finally, I think our member of the board, Mr. Akimbo, said repeatedly that we should try and be at the NES 30, holding in October. That was the middle of October in Abuja, the annual summit of the Nigerian Economic Summit. Let's be part of it. Please register. The link to it has been shared. Thank you so much. I wish every one of us a productive day, a productive week ahead. God bless you all. Thank you. Long live Nigeria. May our economy grow and get better. Thank you so much.
Thank you.
Thank you.
Yeah.
Thank you.
Thank you.
Thank you. So I think with that, we bring the event to a close. Thank you so much. And thank all our participants for being here. Thank you so much. It's been a very interesting session. Bye-bye.
All right. Thank you so much, Sani. Thanks, everyone.
Yeah, thanks. Yeah, bye-bye.